Hi everyone, this is Rob Roy and welcome to the Elliot Elite U.S. Market Update. Not a whole lot has changed over the past week in the markets here in the U.S. Taking a look at the S&P 500 cash index, symbol SPX, you can see that we still have this large consolidation pattern, which is an actual symmetrical triangle. Putting the Elliott wave indicator on, you can see clearly that we finished this 5-wave pattern to the upside. Moving into the end of January, and then the ABCs are telling you we are in consolidation patterns. Remember, the consolidation patterns, whether flat zigzags or triangles, are labeled with ABCs on them. And if we take the primary Elliott wave off, which normally used for that 5-wave pattern, the 1, 2, 3, 4, and 5 levels, I like to just draw the regular lines myself for the corrective patterns. That's just a personal preference. You can use the indicator as well if you like. You can see that something may have occurred here on the 9th, on Wednesday. We may have had a breakout. Let me show you what I mean. And there's not an exact science to drawing these lines, I will give you that. But when you draw the lines, we want to just basically connect highs and lows and try to connect as many points as you can. So we draw the lower trend line there, which is the pattern of higher lows, and then we can come all the way back down here and we connect those lower highs. And if we were to look at it this way, you can see that it looks like possibly Wednesday was a breakout. Now remember, breakouts are not confirmed with a one-day move. It has to have a second day, a follow-through day, a confirmation day in order to actually follow the rules of a legitimate breakout, whether it's from a triangle or breaking from a major support resistance level, moving average, etc. Now the reason that I say that it's possible is, could you make a case for moving this line over here just a little bit and maybe including that? I don't like that as much as I like the line here. But somebody might say, let's still maybe just let's take this line off and draw it at a completely different angle, and you might be able to make a case for this being the upper trend line of the triangle, and it'd be hard to argue with. So Thursday's trade is going to be very important in the U.S. markets to see if we are actually able to break above that trend line, and the original line that I just drew becomes more of the one that's in play. This is exactly the reason why you never try to guess the directional breakout of a triangle. Let it break out. Let it do it for you. If you don't want to place a trade like a strangle, a unique type of strangle that we send out to our subscribers, where it doesn't matter which direction the market goes, and we know we're mathematically positioned to profit based on any sort of a breakout move. But sometimes things just aren't exact, and you can see that you could certainly make a case for those two trend lines. But if we get another big upward day out of Thursday, then you would certainly start to be looking more along the lines of this being a potential breakout. Wouldn't that be a bit shocking to a lot of people if we do actually break to the upside? Because I think there's still a lot of people that got a little shaken out with this move in February and are thinking that the next big move may also be to the downside. We're going to have to watch the next couple of trading days, but they may tell us an awful lot. Let's go take a look at the SPY and bring volume into the mix. You know, you always want to look at price to volume in addition to Elliott wave and whatever supporting indicators that you look at. And note that over these past couple of days, as we've moved back in towards that point of the triangle, volume has fallen off, and that's what you would expect. The more you consolidate, the lighter volume there normally is, and that goes hand in hand with the pattern and the fact that volume has been noticeably lighter through a good part of this consolidation pattern following the big volume spikes that occurred on the correction. So it's going to be very, very interesting to see how things play out. Another thing that plays into the fact that we could be having an upside breakout here is the VIX. We've talked about this many times with that 15 level that was for so long, years basically, a resistance level. We broke above that with that big correction that occurred in February, and it's used that as support all the way up until today. Wednesday's trade in the U.S., where we broke below it. Look, it tried to break below it back on the 4th of May, couldn't do it. held it, came back up, closed above 15. Next couple of days right there, but we were able to break that close. Now the same thing occurs here. We'll be looking to see if the market gives us a follow-through day to the upside in the S&P, and does the VIX give us a follow-through to the downside, because that is breaking a major point of support resistance. Personally, I like to see volatility remain in the market and that 15 level hold, but the market's going to do what the market's going to do, and we listen to what the market tells us, and that's what Elliott Wave does. Elliott Wave gives us a visual depiction of basically what the market's telling you. So you don't have to try to guess, you don't have to try to figure things out on your own. It's doing it for you. The indicator's doing it for you. That's what Elliott Wave was designed to do from Mr. Elliott, is to give you this visual depiction, a technical analysis of what the market is doing and what it's telling you. And that's why it's such a valuable tool, because you don't have to place those guesses along the line. So will we get that second close below 15 on the VIX? If we do, then we have to go back to looking at the fact that 15 becomes resistance again. And we go back to that level of 10 as being support, and maybe into a period of lower volatility. All speculation. The market again will tell us what's going to happen. Looking at TNX, we talked about this in last week's recording, where we had broken above the 61.8% level here. We came back down and tested the previous, which was the 50%, talking about how that's classic Elliott Wave technology. We moved back up, hit the 61.8, back down to the 50%. So we're playing ping pong here between these two fib levels. Again, very commonplace within Fibonacci ratios. And then we closed back above it today with a doji. Now, that's also interesting, but it should clear the way at this point in time for that final move up to complete the zigzag pattern that we've been talking about for how long now. And wouldn't it be amazing if that does bear out, because you know you've seen this for how many months now in these recordings that we've been talking about this potential out of the TNX to move to that 31.5 roughly level on TNX and move above 3% on the 10-year. That's one of the things that might make you think, well, gee, can the market really break to the upside with interest rates going up? A lot of people think 3% was just psychological. It really doesn't affect the economy. That just having a 10-year back at 3% is still low relative to historical times, and that's true. There's nothing to dispute in that argument. It's just we haven't been there for a while, and it went through. It gave the market a little bit of a pause, and maybe 3% plus 3.5, whatever, isn't going to bother the 10-year. I've heard, and this is what happens when one level gets broken. When you start to close above 3, everybody says, oh no, 4 is the problem. If we get a 10-year at 4%, then the market won't like that. It's all speculation, and we'll just see how things play out. I prefer not to try to speculate on what's going to happen. I prefer to just follow what Elliott Wave and the Fibonacci ratios tell us and trade accordingly. I did want to spend a second here on the dollar, because a lot of people don't realize that Elliott Wave works just as well on currencies. In fact, one could argue that Elliott Wave works best, and I have even said this in seminars before, the more liquid the issue, the better the Elliott Wave is, meaning the more accurate the indicators are, because it is measuring what's going on with the psychology of the masses. And currencies are very liquid, extremely liquid, one of the most liquid things we have. The big boys really play in the currency market. So if you have any interest in trading currencies, Elliott Wave is your indicator. And if you already are trading currencies and aren't using Elliott Wave, why not? It's the indicator that you want to use. So when we look at this, I think you can just clearly pick this out. I hope by now that you can eyeball a zigzag. Now we will go through and do the measurements, but at least you should be able to see the pattern of the ABC scenario here. Now let's use these indicators that both Profit Source and Integrated Investor give us. Not all technical tools have these. Some have one, not the other, and vice versa. But we come down here, there was the A wave. Where did we correct to? 61.8. So there's the 61.8% level. That is your B wave correction. Let's label that accordingly. So here was the A. Here was the B. And then we have our C wave extension. So let's use the extension tool and see what occurred there. Looks like a pretty long C. I'm guessing that's an extended wave. And it was the 100%. Look at this. Here we go again, just what we just talked about. Look, the C wave comes down to the 100% level. That's your goal with a 68 or 61.8% correction. And what did it do? It bounced back, tested the 61.8% level. So we extended to 100%, bounced back, tested 61.8, and then went down to 161.8 in an extended C wave. So we completed the extended C wave. This is all the stuff that love to teach people how to see in their charts. So let's take this off and then talk about what happened from there. You know this because we talked about this way back in the months of February and March, even into April with this sideways move, that it really didn't make any sense with the fact that interest rates were going up and the dollar wasn't being supported. Why not? Well, we finished that zigzag to the downside with the extended C wave. You would expect a period of correction, and that's exactly what we got. We got two back-to-back flats. So there's the ABC in the flat, right back into another one. And I'll label these for you. So we had the double flat pattern, two ABCs back-to-back, and then coming out of the sideways correction, we explode into a clear impulse wave. So how far will this A impulse wave go? Anybody's guess. That's the one thing that is very difficult to try to gauge, is how far an A wave, or could that be the start of a big 5-wave Elliott wave pattern and it's really just wave 1? No way to know that at this point in time. No way to know how far that first impulse will go. So if anybody wants to trade that, you want to use tight stops, because this could correct at any point in time and head back into wave 2 or a B wave. We just don't know at this point in time what it's going to be. The indicator will tell us, Elliott wave will tell us once it knows for sure. But again, we don't want to guess. We don't want to speculate. We want to trade based on the information, best information that we have at hand, and that's what Elliott wave gives us. I did want to mention one other thing, because we did have somebody from the last week's recording noticed by looking at the DMI that I have 13 here in this bracket following the DMI, and a lot of people have noted that the default level is 14. I changed that to 13, which is again one of the cool things that Profit Source and Integrated Investor allow you to do, is make adjustments. But why would I do that? Why would I change that from 14 to 13? Because 13 is a Fibonacci number, and that was the reason that I did it. So all you have to do is right click on the indicator, and then you can open it up, and you can change any of these things that you want, the colors, the width of the lines, etc. And you can go through and change whatever you want as far as the indicators. And look, there's all the differences there. And so I changed the parameters there to make that 13 instead of 14 on the DMI. And all that does really is give you a little bit earlier of a signal. And now looking at the DMI here, you can see that the ADX is rocketing higher. It's now moved outside of that green line, which is the positive directional indicator, which at this point is telling you, okay, that may be the end of the strongest part of this move. That doesn't mean that we can't go higher from here. It just means that the strongest part of the move is likely over. You can still go up on less strength. It just means that we had a very strong move, and that part is over. So appreciate the question of the person that wrote in and asked about that. And if you have your own private settings that you like and you want to make adjustments to, then go ahead and make those adjustments. If you get really good at an indicator, you want to fool around with it, do some back testing. You can do that with Profit Source and Integrated Investor as well. Make yourself adept at whatever trading system you want, whatever combination of indicators you want to use, and become the best at your own system. I'm sharing my system with you, but I'm not trying to say that I have the holy grail system and that everybody should do exactly what I do. I'm just sharing with you what I do. I mean, we've had great success, haven't we? We've looked at charts ahead of time, and the results speak for themselves, but that may not necessarily be just me. That's the indicators and these software tools. So that's it for this week's recording. Hope everybody's had a wonderful week. Take care and be back to talk to you again next week.